Welcome back, everyone, to Vox Markets. My name is Paul, and I'm delighted again to be able to speak to CEO Ian Stafford-Taylor and CFO Richard Cooper of Equals Group, a international payments business, B2B international payments business. Welcome, gents.
Hi, Paul.
Thank you.
Big congrats on this morning's Emiratu Kanu-esque type of numbers with Q3 outlook. So I don't suppose we could start there, can we? Can you just give us a brief overview of the sort of the highlights, what's been driving the top line growth?
Sure, and I think H1 we had the trading statement, didn't we, in early July? So maybe a lot of that was already priced in, but internally we knew how well the traction was, particularly on the solutions side of the business, which we'll come to in a bit more detail later. But also on the, for want of a better word, core business, things were clicking into place. And I mentioned last time we spoke the concept of this own name multi-currency IBAN, which I know is a big mouthful and quite hard to understand. But if you think of, for any business, they have an account in their own name, not in a pooled account, a la, a regular bank account, makes everything so much easier for businesses. They can throw all their collections into one bucket. It gets put in the right place, all in one platform. We can do bulk payments out, so zillions and zillions of payments very easily, again, all in one platform. And having that all assembled, which happened towards the end of H1, and the pipeline of demand we knew that we had for it, we were confident going into Q3, but once bitten, thrice shy. We didn't want to be saying we're going to have an amazing quarter, but we have had an amazing quarter. I don't think you can put it any other way when you look at the numbers. So it's not solutions, whilst important, is actually just the three legs of the business stitched together, which is what we've been talking about for some time. So it's not that we've created a new product, it's the products we already have sing in harmony now through one thing, such that the bits that we've assembled, and if you break it down into little pieces, maybe that's not so hard, but to do it all together as a whole is the art of it. And it takes time, it takes platform, it takes determination, it takes banks, it takes connectivity. Not easy to do, and we've done it, and we're seeing the fruits of that labor come through strongly in Q3.
And that IBAN sort of code for the actual corporate, that allows you then to sort of like sell and cross-sell and offer that one-stop shop that you've been talking about. Is that the idea?
I mean, IBAN, if people haven't come across the term, is, international bank account number. It's one of the easier acronyms to remember. And even in the UK, we're used to a sort code and account number. If you look at the top of your statement, you will see an IBAN number, which has got those numbers in it, prefixed with a GB. And that is an internationally recognized way of defining an account, whether you're in Europe, anywhere in the world. And giving corporates that long number, that means that they can literally throw any currency from anywhere into an account in their name, is a powerful thing to have. It opens up all sorts of possibilities.
It's a multi-currency account, is it? But all in the same...
But just one account. Yeah, so that one long number defines any currency. So if you're receiving in euros or dollars or any currency, you give the same number.
Right, I gotcha. And then can you also just talk about sort of the increase in forward contracts? Because it appears as though the order value has increased and you're doing now more forwards, which are obviously quite highly specialized type of Forex rather than a push the button buy a futures.
Well, and yes and no. I mean, a forward contract, it's not a full derivative. It's not like we're trading options or getting to complicated derivatives. It's, purely that you need to buy £1 million worth of euros in 6 months' time. Do half of it now, so you've locked in the rate that it is now, so you hedged your exposure type of thing. They're quite easy to administer our end. We have the systems to do it. Typically, there's slightly wider spreads of margins on forward contracts than there is on the spot transactions. So your ideal customer would be doing a mixture, and you do the forward contracts and hope to win some of the spot business as well. Right. And what you're seeing over time as the platform evolves, based on the investment we've made over the last few years, is that we'll be pushing more customers towards doing their vanilla spot business or smaller transactions on the platform themselves, and use the dealers and the expertise for the larger transactions and or forward contracts. Because they're sort of, they need to change £10,000 to pay a small bill into euros. You can press a button and do that yourself. You don't really need to speak to dealers to do that. So
yeah,
marrying up the level of service that we give to the revenue potential of the client or the piece of the client's activity is another key part of what we're doing, rather than one size fits all.
yeah. And when we chatted last, a couple of months back, it was right at the beginning of July. I think I rudely interrupted you when you were sort of on a cheap holiday.
Doesn't sound like you, Paul.
You're on a cheap holiday, I think, in a boat somewhere. So apologies for doing that. But anyway, sort of 2 months ago, we were sort of like, or I was anyway, hypothesizing whether we would hit a sort of like a £10 million quarter. But since then, in the last 2 months, the top line has just literally gone through the roof. I mean, and driven a large part of that is obviously the equals solution. Can you just talk about that? Because it seems to be you're now addressing not only your sweet spot of small, medium sort of B2B sort of type business, but you're also the bigger corporates as well.
Yes. So as I mentioned earlier, I kind of knew when you asked the question, I kind of hoped maybe we do it straight away.
Okay.
But I know you were thinking maybe next year or towards the end
I was saying 12 to 18 months.
Well, yeah. I mean, I think we can say confidently that we will do that this quarter.
Yeah.
Based on what we've already done. So think of it this way: what we've assembled over the last couple of years, the equals money proposition is towards the SMEs. So that's own name, multi-currency IBAN, all products on one suite, move the money around. Or in fact, we've set ourselves up as not just money, you can actually, anything of value, we can actually record and move it around, send it by card, send it by payment. Got the expenses platform, we've got the bank account functionality. That's equals money, that's SMEs. Equals solutions is kind of like a one step up to slightly bigger corporates that will be definitely multi-currency in nature or cross-border, have typically, they need the ability to open up accounts quickly, multi-jurisdictional, flows in, flows out, could be, thousands of tickets per month type thing. So in bulk, in volume, need the ability within the platform to have approval protocols. So it could be they're distributed. So person here can approve a transaction, but needs a second pair of eyes on it before we can release it. That's the kind of, so overlaying the payment functionality with this approval functionality with compliance such that we can spin them up quickly, and you get this clever formula, which is, so a customer there, a decent customer, it could be £500,000 a year type revenue type customer. So we won't be signing as many of them, but they're lumpy when we get them. So it's going to skew all the numbers. And
I think you said in your statement that you've got a strong pipeline in your corporate.
Yeah, we do. For that, the stuff that we can offer, there's a big demand for it. Let me give you another example. If you're a business,
you got any names you could possibly?
No,
is it?
no.
Okay.
Generally,
you have to shoot me. Okay, that's fine.
Generally, that's we're the silent engine room.
Yeah. Okay.
So if you're a business that gets paid by a debit or credit card, and to receive those payments, you need a very technical term, a merchant acquiring account somewhere, or maybe even use PayPal. And for that merchant acquiring account to pay money to you, you need an account in your own name. So now we have the own name IBAN, they can send those monies to us and we can do the FX way cheaper than PayPal would do it. So we're offering the capability we now have allow us to go after Amazon traders, online content providers, fund administrators that are spinning up funds quickly and need the compliance done. There's lots of market segments where what we have is very attractive and hard to get. Right. So, but equally, as they're lumpy, each one's lumpy. It could be that we go a couple of months and we don't sign any because of they need this system or that system or their compliance is slow, or so we're cautious, but you can't argue with the revenue that we're producing in this quarter.
Yeah. Now, Richard. Okay, so Ian's pushing the revenue button. What about the sort of the costs and the contribution margin? Because obviously we've got that sort of that mix happening in terms of bigger accounts and more volume going through. But presumably, if the costs are and they continue to be well controlled, we will start seeing some operating leverage come through.
Yes, but we're also very clear that we want to keep reinvesting in the product, keep driving the marketing to continue to push revenue even higher.
Yeah.
We see that as more advantageous than sort of nickel and diming a few costs now that we are operationally cash break even and cash generative. I mean, that's one of the key messages, I think. For a fintech, we are operationally cash generative.
Yeah.
We do not need to look at a bank to help us out. We do not need to do an equity raise. We can stand on our own 2 feet. We've gone through a huge wall of build, come out the other side very, very strong. That's manifesting itself in the revenue. And what do we expect to happen on costs and contribution? Let's just take costs or overheads, if you like, to start with. We expect them to move up marginally. We're at pretty much at the bottom. We think we've hammered away at the staff costs. We've now got a really fantastic core of very, very important staff. We're always looking out for new talent, and that doesn't come cheap. We're very conscious about the tightness of the labour market. We're always focusing on what sort of incentives we might be able to offer staff. And we expect staff numbers to go up. I mean, we've put fantastic operational tools in to effectively keep that down. The fact that we can sort of turn around trading data, so fast, I think is witness to the fact how under control we are. What are the pinch points other than staff? Well, IT, we're investing in IT. We expect IT spend to go up. I think we could probably argue that we are the place to go to as a white label now because of our compliance and customer services capability, and we expect those regulatory costs to go up. That's something that's planned, not accidental. And in relation to contribution margins, it varies product by product. For most of our core businesses, we're holding our own. As we push into forwards and push further into the competitive FX market space, those margins will come under marginal pressure, but nothing that will really cause me to have a suck in a breath or anything like that. And it's all manageable within our contribution margin.
Okay, and then just broadly, just hypothetically, in that second half, if we did sort of like an extra, I don't know, 2 or 3 million pounds of turnover in the second half compared to the first, how much of that, just roughly what percentage, if we weren't doing the extra investment, would sort of like you'd indicatively drop through? Would it be sort of like 40-45%, something like that?
Well, given that our contribution margin aggregates 60%, 40 is probably not a bad call on that. It would be a bit more staff, it would be a bit more regulatory, a bit more IT spend to gear it up. But yes, and it really depends on, have we spotted the correct digital marketing opportunities? If you heard Martin Sorrell on the radio this morning, you've seen how successful he's been through the digital channel. So it's all quite good. In terms of working capital, we may want to choose some of those excess funds to help pump prime other parts of our forward business, and that gives us the opportunity to cross-sell to those customers.
Yeah. And then Ian, just on the, I know it's sort of like, it's a bit of a has been over this last.
What are you going to ask me now? When's the 12 million quarter?
Actually, could you answer that as well? No, you won't answer. Just on the consumer side of it, obviously, you put out, there was a great bit of analysis you did at the trading update, and it was showing that effectively the consumer side and the travel side had obviously been badly hit by the pandemic. How do you see that over the next sort of 12 or 18 months? Because, I mean, next year, when we're all vaccinated, there should be a lot of travel between the UK and just the Mediterranean, because the amount of bookings going to Spain, Portugal and Greece is enormous.
Well, what about Scotland? There'll be travel to Scotland with their own currency.
Possibly.
Scottish pound. I mean, we've seen a pickup, but we're not back to the levels that we were a couple of years ago. So the B2C travel side has improved from nothing, to something meaningful. I'd say we're, running about half where we would be in a normal year. And clearly, if things are back to more normal next year, we'd expect that to come in, and that's subject to the contribution drop through, pretty much a free revenue lump to add on, isn't it? We don't really need to do much for it. The product's in good shape. As and when people are traveling, it works, and we've added some new.
So this really large jump in Q3 so far, you've seen the first two, sort of July and August. That's still without much contribution from the consumer. That's what you're saying. Is that?
Yes.
Yeah.
Yeah, that's exactly what I'm saying.
Fabulous. Okay, and then just in terms of the sort of new products and anything coming on along the lines, is it really just carry on sort of offering from this sort of central focus, the INBAN and this?
Yeah, I mean, the INBAN is what the customer sees.
It connects it.
Beneath the surface of that, there's a lot of more work going on, which is way too technical to talk about here. But internally, that whole concept of straight through processing, such that we'll have to touch less and less transactions, which you can reinvest that efficiency gain either by cutting staff. As Richard said, we don't want to do that. I think we're about the right weight, or we may expand, but more revenue generating roles, or it just buys you more capacity.
Yeah.
If we carry on growing at the clip we're growing at now, you need to be sure that your systems, your operational procedures, et cetera, can all cope. So driving more transactions for the customer at the lower revenue end to self-serve, where we don't touch it from a transacting end, all the way through settlement. If it can be no touch other than transaction monitoring and exception-based handling, then you get that efficiency and scale capacity. So going back to your earlier question to Richard, it feels to me, and the numbers kind of bear that out, that we're on that bit now of the J. Such that, if we doubled our revenue, be a good problem to have. The costs aren't going to go up anywhere near double, way less. So the operational gearing, we've passed that inflection point and we're in it now.
Good. And then, I mean, what's the sort of strategically the focus? Is it organic growth? And if there's opportunistic sort of M&A, then you do it. So it's really just keep pushing the foot to the metal, is it?
Yes. And just on the solutions P&L, just back to that, early on and where we are now, a fair chunk of that revenue comes from affiliates or third parties that are giving us, here's a customer that needs this. But as we go forwards, over the next 12 months, we'll be selling more directly, which will improve the contribution margin of that revenue stream also. So that will also help the numbers as we go forwards.
Fabulous. And then sort of Richard, just going forward, what is the sort of like the time scales in terms of the news flow, sort of like over for next trading updates or whatever?
Well, typically we would like to do something very early in December, and then probably about 6 weeks later. So everyone has a sort of steer going into the year end, helps the portfolios, then confirm the numbers sort of mid-January, maybe a little bit earlier than that, and subject to us being able to book in our auditors at the right time, because it's a very competitive time scene. I would love to be able to get our numbers out third week in March.
Fabulous.
Because then that would give us really good headway before Easter, an opportunity to update more slightly earlier AGM, and then likewise early July. So if we could do 6 a year, I think that would be good news flow.
Fabulous. And then just for sort of like investors, I mean, just from my sort of modeling, and this is all my numbers, I mean, I now have upgraded mine. So I've got revenue for this year of 37, and I've got EBITDA of 4.6 versus 16.9 revenue in the first half, and 1.6 million EBITDA in the first half as well. And that just come through on the operating leverage it shows through. And just my valuation now, it tops up by about 10% from 70p minimums, and I think it's conservative to 78p. So that's really sort of a bit of background for investors. But Ian, just on the close, then I will return to that hypothetical question because maybe I didn't give it enough justice. What about this 12 million this quarter? Next 12, 18. If I say 12 to 18 months, does that sound reasonable?
That sounds very reasonable.
Fabulous. Okay, well, very best of luck, guys, and terrific. As I say, Emma Raducanu-esque type of.
By the way, I did sit up and watch that, and I'm glad I did. It was amazing to watch.
Well, she knocked the ball out of the park, and I think you guys are doing it at the moment. So please keep it up. So look forward in touching base again, guys, at the next training update.
Yeah, will do. Thanks, Paul.
Thanks.